As you all know that my videos generally are based on the real life question. So I'm trying to take out one of the question which was made to me last week by one of my non-resident client based in United States, and the person was contemplating to invest in an Indian startup. And obviously, as for the Indian ecosystem right now, a startup has to be more than 3 year old to get listed even on a SME exchange. So 90% of the cases the startup would be an unlisted entity, and the shares of unlisted company wherein the security transaction taxes are not paid are treated very differently as compared to equity oriented mutual fund or a normal listed equity in India. The question was twofold. The first question was that how a non-resident can get income from an Indian startup or is subsidiary, wholly owned or otherwise. And the second was, what about the repatriation of the capital and the taxation and the withholding taxes on the exit in this particular startup? So the first question, the income. Withholding taxes in India are quite big for the non-resident, and I totally agree with that. And I'm just taking one small example of let's say a dividend, wherein a SME class, a private limited company in India, generates the profit, makes the reserves, and decide to announce dividend and pay dividend to its shareholder, and who let's say is a non-resident entity. So the company will first pay 25% of corporate income tax plus some changes for the cess and others. But let's count for the numeric purpose 25%. Then it makes another 20 point something for the dividend distribution tax, and then that money goes to the non-resident person, who again pays some income tax or something in the country of residence, and this is how it's making more than 60% of tax in net, and which is not a happy situation. So I totally agree, and this income part needs to be managed accordingly by forming an entity or some other corporate tax planning mechanism. So not getting into that detail, if you have any specific question, you can shoot me the question at my email, and I will be glad to answer that. Second thing, the capital repatriation to country of your residence. If the good days comes and you get a good exit in an Indian startup, this is pretty simple, and I would say quite good as compared to many other countries globally. Uh, Unlisted shares are treated as a normal stock and not a stock of equity oriented fund or listed company, and those are taxed differently here. And in a startup you are talking about unlisted shares. So holding period of asset in the unlisted category is 24 months. If you hold the share from date of allotment of shares to date of transfer of your shareholding, there is a gap of 24 months, then this unlisted share qualify for the long-term capital asset, and the gain made thereon would be treated as a long-term capital gain. And to your surprise, the withholding tax is just 10% in India, and 90% of the proceed you get in country of your residence in your bank account. The taxes of your country I cannot comment upon, and that could be talked differently, in a different session. But in India, the withholding tax will just be 10%, and that's too on the capital gain made by you. So I really believe this is a comfortable situation. So here I have tried to answer you how to take out the income from India. For that you will have to do some tax management. And as far as repatriation of your capital goes, if the foreign direct investment has happened as per the law, as per the allowed mechanism and approval has been taken under automatic route or government route, and all the compliances has been done, and repatriability is not a challenge and is not prohibited by government. In those situations, you just have 10% of withholding tax and get your money back into your country, and then you can deal with it accordingly. So I hope if you are thinking about or contemplating about the taxation and withholding tax of India, this would really clarify your mind that it's not a big deal. It's the income part which is little cumbersome as far as withholding taxes goes. Now coming back to one essential extension of this question, many of you might be interested to know whether I will have to file the income tax return in India or not. For that, there could be a professional dilemma, and we could disagree or agree, but my opinion in that, if you have an income which is arising out of an asset in India or as undertaking in India which is operating in the Indian territory, so your income would be deemed to accrue in India, and in that situation you must file the income tax return here. And income tax return doesn't mean you have to necessarily pay the taxes. You just could declare your income in India and just claim the refund. And secondly, whatever taxes you pay in India, you ultimately end up getting the credit in your own country, because India has a double tax avoidance agreement with I believe more than 100 countries, and all the European Union countries, Australia, China, US. I think everyone is covered, and the taxation anyway happens on the preferential rate. So getting the credit in your country should not be issue, because the Indian company will issue your tax credit statement as well. So I hope this video clarify many of your doubts. And if you have any specific question, I'd be really glad to answer that. You can reach me out at my email. And okay, hope this solves some of the problem and you get more interested to invest in the Indian startup. Thank you so much for watching this video. See you in my next video for solving some other problem. Thank you.